Thank you, Damien. So I just thought I'd just finish off with a couple of slides on the operations sort of side and exactly how we do everything, just so it's clear. And FYI, we've got a little fact sheet as well, which is just sitting at the back there. So if you want to know more, there's obviously everything in a bit more detail. But essentially, we're quite lucky in the sense that we started this company with some pretty good tools to put in place to do what we wanted to do. And so one of those things is obviously, as you've seen today, stock analysis and getting the asset management sort of and the tactical side right is very important, and we need to have a structure that does that very easily. And so we use a type of account called a separately managed account. Actually, just before I start, how many current clients have we got in here? Well, that's a good sign. Yeah, there we go. More than came last year, I suppose. That's a good sign. Anyway, very good. Thanks, guys. So essentially we use these separately managed accounts, and what that does is it gives, from the client's perspective, it gives them a portfolio of individually owned shares. So it's not a pooled trust. There's no managed funds, these sort of things in there. And from our side, it means that we've got this vast array of levers that we can pull to try and extract the most value out of the themes that you've been talking about or you've heard about today. Behind the separately managed account, we use a company called Linear, which are just down the road, and they're the platform administrator. And then from a custodial point of view, and that means at the end of the day, if everything goes to pot, who's hanging on to my shares? That's JP Morgan, one of the biggest investment banks in the world. And from a cash management point of view, it's the ANZ Bank. So we're at arm's length of all client capital. We don't touch any client capital, and I guess we just think of it as essentially the gold standard for the way that a private wealth company should run money. We pull the levers, we focus on the investments and getting the analysis right, and they look after the day-to-day trading. In terms of getting on board, we use this online portal.nucleuswealth.com. And we've put this together to essentially onboard a client in about 10 minutes, and that includes a statement of advice or a letter of engagement, the AML, the checking to make sure the anti-money laundering side of things, ID checks and all that. And we've put this together so a person can basically sit down, tell us a bit of information about themselves, and then we can either put together a portfolio or they can pluck it off the shelf, and they can be done and stand up in 10 minutes, and we'll create the account the next day. So we're pretty proud of that system, and it's worked very well for the last 220 odd clients I think we've got at the moment, so in the last sort of 13, 14 months. If you were to look holistically and going back to the individual shares, so this is essentially what a client would see, and hopefully I see a few nods in the room. So essentially, for someone that's in a mixed portfolio, you see all the stocks that you own, warts and all. Now, it can be obviously a bit of a double-edged sword if things don't go well, but in my experience, the more information that a client has, the better. At the end of the day, when markets aren't performing well, rather than just seeing a big negative on a managed fund, you actually get to see what's going on behind the scenes and be able to find some information about that. There's fixed income, we use government treasuries for that, and then obviously cash, and we can, there's cash available in all the major currencies. The two major ways that we have available for clients to invest is either in the tactical options, where there's that blend of cash and bonds and shares that you saw before, or you can come in and you can say, I just want to take your core international, for example, which is quite popular, off the shelf. For someone like that, it might be a self-managed super fund. Perhaps they say, look, I'll look after the term deposits, and I may or may not have Aussie exposure, depending on how much I read Macrobusiness. But I think I like what you're doing in international, so I'll just choose that, and that will go into my piece. The key thing to be careful of there, of course, is it's not tactically managed. So we'll just invest that at 98% in the share market, in the world share markets, for example, all the time. And you need to do your own portfolio analysis and buy more and sell down to get that right. The flip side is the tactical funds. So that's where you're putting it onto the guys instead to say, okay, I want you to take the macro view, and I want you to do my asset weighting in cash and bonds and Aussie and international, as you've seen tonight. And I guess in a sense, a little bit more hands off, if I can use that term, in terms of investment. So inside of the tactical, we've got a smaller one. So we wanted to make this opportunity available to people with smaller amounts of money, still some money, of course. So we've got a foundation fund which goes from 35 to 200k. And what we do there is, instead of using direct international shares, we just use international ETFs. So you get Aussie bonds, cash and international ETFs, and it just means that from a parcel point of view, there's about 35 holdings, there's about $1,000 in each one, and then as you progress, or if you've got more money, you can look at the 200k plus ones where you'll get the full international complement as well, and then the portfolio goes out to about 110 holdings. So just to give you a bit of an idea of why we've set those minimums. Just finally, one of the other areas of separately managed accounts, which actually we sort of, in a sense, we sort of fell into, but one of the really good things about separately managed accounts is at the end of the day, it's a discrete share portfolio, which means that we can tailor the share portfolio, and in this case, we've used ethical themes for each person. So you can actually come in and you can say, okay, as you can see, I think we've got most of them up there. I'm still waiting to hear if there's any others. But there's 19 themes that you can apply on your portfolio individually. So rather than choosing like a ethical exchange traded fund, which has a big basket of all these different ethics, if you might be ambivalent to a couple of things in there, but potentially losing out on performance. So we've gone the other way round, where you can build your way up, essentially. So we like to think it's a pretty good ad. At the moment, I think about 2 out of 3 investors that invest with us have at least one ethical screen ticked, which is quite telling. One of the more popular ones is old growth forests. I'm not sure why. Maybe it's a Melbourne thing, or I'm not.
There's not many companies that do that anymore.
It's not a big effect on the portfolio, but essentially what that means is it locks any future stocks out in that area as well. So as I said, it's very popular, and I think it's probably something that we do quite differently in terms of choosing an investment manager. On that note, thanks for that. That's the end of our content piece, and I'll open up to any questions directly relevant, I guess, to the fund or the investment piece, and then we'll go to the broader Q&A after that. Were there any?